you're actually experiencing right now negative lease trade outs, which is something that,
Yeah.
so basically like whatever you rented the apartment for like a year or two ago or three ago, whatever you're, if someone moves out and you have to move someone back in, it's less than that amount, whatever you rented it for before. We're experiencing it. A lot of people are across the entire country. And people are saying it's mostly due to oversupply that still exists for right now, but it's just a phenomenon that we were experiencing the opposite of during COVID.
Yeah,
Um,
exactly. And it's funny. Like you can look at deals now where there's, everyone, the whole thing in the value add world is loss to lease. Why, the rents are lower than where they should be. How far away? What's the delta between the two? Now there are some deals where it's the other way. There's gain to lease,
Gain
right?
to
Where it's
lease. Yep.
if
Hmm.
those tenants move out, you're actually leasing at a lower amount,
Hmm.
which is for the people that have been in who got into this really anytime after like 2011, 12, or whenever the depths of the GFC. It's like you have to completely unwind how you look at deals. Um, and for us, we do a lot more longer lease terms, right? 16, 18-month leases now. And I never wanted to do that for the first 8 years of being in, or 7 years of being in real estate, because it's like, I don't want to lock in this rent for a year and a half, 24 months, because I want to be able to, I know that we're probably going to get a little bit more movement rent wise, and I want to be able to keep bumping them and staying close to market. Whereas now I'm comfortable if a tenant's open to it. We're offering multiple different lease terms on our trade outs. Here's
It's
12 months.
defense.
Here's
You're
exactly.
playing defense right now.
Yeah,
But
100%.
what's causing that in your market? I mean, in our market, we do believe it's because of oversupply with using the free COVID money back in 21 that now are coming to completion, and it affects some of our properties. For example, in your market, you said there was not that much construction going. Are people maybe moving, leaving the area? Is that what's maybe driving that? What is that? What is causing that in your market?
Yeah, I think well, I think the first thing in context, New Hampshire, highest population growth in the all of the Northeast US. It's one of the only states in, basically Virginia and North, about 10, 12 states that has positive population growth. Massachusetts, New York, Connecticut, Rhode Island, like negative population growth. New Hampshire, no state income tax, no sales tax. It's a very low cost of living state relative to its neighbors. So there's still growth, but I think the big thing is that we primarily buy C class deals. 75, 80% of what we own and operate is C class. I think C class over the last couple of years has been very affected, or significantly affected by just inflation, cost of living increases. There's less disposable income, generally speaking, in that resident demographic than A class, B class. And therefore, it's hard to continue pushing rents because the income is maybe not there in some markets, where the income growth hasn't maintained in order to even pay elevated rents or rents that continue to grow. I think that's part of what's happened in our market. I think household formation is something that not a lot of people talk about, where when people are trying to save money, people move less, like just fundamentally, right? People stay in a roommate situation longer. Boyfriends and girlfriends maybe move in sooner than later. And instead of two guys who live in a two-bedroom apartment doing well and moving out and each getting their own one bed, they stay in that two-bedroom longer. So when there's less moves, there's less demand from a rent standpoint, tenant standpoint, and therefore I don't think you're able to continue, pushing rents at the same level that you once were. So I think that's a significant change in our market. And I think that's probably consistent nationwide. And even in our market where we still have a bit of a housing shortage and there less supply has been added in terms of like as a percentage of the overall housing stock as some of the more high supply markets, we've still had a lot of supply despite that, relative to what is normally built in our market. So a lot of that's getting absorbed now, and we're starting to see rents. 2024 in New Hampshire, we had a few percent rent growth. So over the last 12 months, we're starting to come back a little bit. In 2025, in a lot of our trade outs, we're seeing year over year increases now in growing tenant demand. But I think the formation piece of it's probably the big one. When people are unsure of, maybe their consistency of their income and they're spending more on other things outside of rents, you're not as excited about moving, and especially increasing your rents if you do move.
What is your next stage of growth, you think? I mean, stage one, of course, is if you getting into these deals using your own capital and then growing up to 70 units, which was pretty cool. And then you had a big breakout as you started JVing and syndicating a little bit more. And now I sense that you feel like you're kind of limited a little bit in the market that you're in, and you feel like you
Mhm.
want to go into another market. What do you think that looks like? If and how, how much do you want to get to that next level of stage growth? Because that's another thing. I mean, do you want to grow for growth sakes? Is it really, do you want it that, do you want to get there, right? Or simply just
Yeah.
hold on what you got right there and life's pretty good? Or do you want to get to that next level? And what would that look like?
Yeah, it's a great question. I am a big fan of thinking, with the end in mind. Like, what is the ideal end state and working backwards? For me, I never really had the dreams or goals of running a, 25 person streaking strictly or speaking strictly about the investment company where a few investor relations people and multiple asset managers, and we're overseeing 4 or 5 thousand units and we're growing a very large enterprise. I don't like being a manager. It's just not really my skill set. And that's the biggest thing I try to work on now that I've got a few people in the business. And now that luckily I have an operational partner in our PM company, like it's separately branded in-house, but I own it with a business partner. We have, I don't know, 21 employees in that business now, but he's running the day to day and I'm more of an advisory role kind of behind the scenes. Um, I used to think that's what I wanted. And then as I started managing more and hiring more, I just realized like, you're not, that's not really your special sauce. Your special sauce is like finding the deals and really building a good engine to do that. Creating the content, marketing, etc. So that's what I want to lean more into now. I think the next stage is we continue to maybe buy a similar, we buy anywhere from 150 to 250 units a year. Average unit count of the buildings that we buy being anywhere from 8 to 12, right? So it's a high volume of these smaller deals approach. My goal is to slowly shift away from that and to increase the average units of the deal that we buy. So we bought a 72 unit end of 2024, it was about a $16 million deal, and that was the biggest deal that we had done individually up to that point. It was a $5 million raise. I raised about half the equity. I had to bring in some other folks to help with the other half. So for me, it's like maybe slightly lower volume of deals, slightly less paperwork, and do 5, 10 kind of these mid-sized deals, 50 to 100 units in size. And I think we can do that in our current market and to raise more of the equity to required to get those done and to kind of own a bigger slice of the pie of those. And then after that, it's probably layering in just like maybe one or two more northeastern markets into the equation that are within an hour and a half drive of Boston. I know that I'm labeling my own limiting belief here of like, it would be good to head south and maybe farther down the coast into a market that's a little bit or that's uncorrelated or however we want to define that with what's going on up in the Northeast, whether that's like North Carolina, South Carolina, Florida, et cetera. Kind of pick one geographic area that's maybe a little different than the Northeast and go a little deeper there and build out a team there. But for me, it's probably easiest to just build in another region within New England because New England, early 1900s housing stock predominantly, even a lot of the larger deals, stuff that's 100 unit. We looked at a 100 unit deal as a 20s build, and we were close to getting it, but somebody else paid more than us. So like we've gotten pretty good at like owning and operating that kind of that stuff that's a little trickier and a little hairier to own. So I think that's probably the next step for us. But for me, like the end game is 5, 10 person team, a couple of acquisitions guys, investor relations, admin, asset manager to something like that. Maybe we own a couple thousand units that we have a real meaningful percentage of the promote on, and in growing a business that serves the lifestyle a little bit more than my lifestyle revolves around the business.
That's a good point. You got to ask yourself, what do you really want? I mean, there's people who just want 10,000 units. They just like the idea, and then there's other people who really want to enable their lifestyle. And I think you got to figure out where you want to be. The good news is that we have options, right? You're in a good position with
Yep.
500,000 units, whatever. You can continue scaling if you want, or you can say, hey, I'm just going to stay here and just enjoy the cash flow and just and do what I want to do. And so I think the cool thing about it is that it does give you options, and that is one reason I like this business. But Axel, how can people connect with you, find out more about what you're doing?
Sure. Yeah. Businesses Aligned Real Estate Partners. AlignedREP.com is our website. If you want to find me on social media, at Multifamily Wealth is my Instagram. Very active on there, posting a lot of content. The Multifamily Wealth podcast is the podcast. Michael's was on that a couple weeks ago. I think we released the episode maybe week, 2 weeks back. But new episode every week, deep dive on multifamily specifically, operationally finding deals, raising capital, all that fun stuff. Lastly, if you just want to reach out to me personally, Axel, AXEL, at alignedrep.com.
Awesome. Hey, Axel, thanks so much for coming here, sharing your story, going back all the way in time and kind of sharing your struggles with us. And it was great to learn how you scaled to this place. So awesome. Thanks for being here today.
No, I appreciate the invite. It was a blast, guys.